It's the perps DEX that's got everyone talking. After a year of Hyperliquid looking like the Binance of DeFi, CZ himself has taken the fight to them with a rival called Aster. But this is no vanity project. Aster's taking perps beyond BNB to the multichain, bringing yield to your collateral and even offering stealth trading features you won't find elsewhere. The tweets and airdrops got everyone's attention, but is Aster actually worth using? Well, this complete guide will show you exactly how to get set up and make the most of Aster so you can decide for yourself. First things first though, none of this is financial advice. This is a practical guide to using Aster, the Perpetual Futures decentralized exchange. We're covering everything from basic setup to advanced features, but what you do with that information is entirely up to you. And you should also know that derivatives trading is extremely risky and difficult. I don't know who needs to hear this, but if you're trading derivatives without a system that is demonstrably profitable over many trades, you're putting the cart before the horse, so to speak. If you want to be a trader, take it seriously and actually study how to survive in the trenches before putting your own assets on the front lines. First you learn, then you earn. And lastly, this video is not sponsored by Aster, CZ, or anyone else. We do, though, have an exclusive sign-up deal that can save you a lot of crypto on Aster, but you're still getting our own unfiltered views along with some tips and tricks, including some they might not want you to know. We'll come back to all of that later though, so stick around. And with all that out of the way, smash that like button and let's begin. Now, Aster looks like an overnight success story, but it's actually the result of a merger. In late 2024, two existing projects, Asterus and APX Finance, combined forces. Asterus brought multi-asset liquidity features, and APX brought a working decentralized perpetual futures trading protocol. When they launched as Aster in early 2025, they weren't starting from scratch. And yes, this is a project with some very big names behind it. Aster is backed by Easy Labs, which is basically a rebranded Binance Labs venture arm. CZ has an advisory role, and the team is packed with ex-Binance employees. Aster's CEO goes only by Leonard and keeps a low profile, but when you've got CZ tweeting about your project, well, who needs a charismatic founder? And they've catapulted Aster into the spotlight at a strategic moment. Hyperliquid has been eating Binance's lunch in derivatives, but starting this November, Hype faces hundreds of millions in monthly token unlocks that last for 2 years. This has been described by former Hype whale Arthur Hayes as a, quote, sword of Damocles hanging over Hyperliquid. He suggests that Aster was deliberately ushered into the limelight at Hyperliquid's most vulnerable moment. Now, of course, token unlocks have no material effect on the Hyperliquid exchange. But if a glut of supply hitting the market depresses the price of Hype for an extended period, then sentiment will inevitably be affected. And this makes the current moment an ideal one for Aster to launch an aggressive growth campaign. As for CZ, he acknowledges Aster competes with Binance just as much as Hyperliquid does, but he also claims it strengthens the BNB ecosystem. So, better to have competition you're invested in than competition you're not. Now, that's all very interesting, but what makes Aster different and who is it for? In a nutshell, Aster is a multi-chain perpetual futures DEX built for DeFi thrill seekers and capital efficiency maximizers. For context, Hyperliquid's pitch is that it has brought the experience of top-tier centralized exchange perps trading on-chain. It's an impressive technical feat, but they're not reinventing the wheel. Aster differentiates itself here with an offering of more exotic and high-octane features. For example, where Hyperliquid enables comparatively modest leverage of up to 40x, Aster invites you to crank it up to 1001x. Where Hyperliquid currently accepts only USDC as trading collateral, Aster lets you use yield-bearing liquid staking derivatives. And where Hyperliquid runs entirely on its own proprietary chain, Aster enables trading from BNB Chain, Arbitrum, Ethereum, or Solana without bridging. Now, these multi-chain features are actually pretty slick under the hood. Orders from multiple chains feed into a single order book run by Aster's matching engine. Place a trade on Solana and it might match with someone on BNB chain, settled through their cross-chain messaging protocol. So, your collateral stays on your chosen chain, but your trades tap a shared liquidity pool. Aster juggles the mess of tracking collateral across chains with different block times, ensuring trades settle smoothly. They're using optimistic execution with fraud proofs, and zero-knowledge proofs are apparently also in the pipeline to make things even tighter. Compared to Hyperliquid, fees are lower on Aster, but so is liquidity, which can be a pain if you're trading large positions. Aster is very snappy on Solana, but on EVM chains it can't compete with the sub-second settlement you'll get on Hyperliquid's custom L1. UX-wise, Hyperliquid resembles a sleek centralized exchange, simple and polished. Aster is feature-packed but complex, a bit like Android to Hyperliquid's iPhone. The downside there is that more chains and features mean more complexity, and that means more chances for bugs or attacks. Aster keeps separate insurance funds per chain, which spreads out protection. So, an exploit on one shouldn't hit others, but in crypto, shouldn't can bite you. They're betting multi-chain convenience beats the risks. And so far, Aster's numbers suggest it might be working. Daily trading volume hit $104 billion at one point. They collected $29 million in fees in a single day. TVL went from $625 million to $2.2 billion in a week. The Aster token, meanwhile, did a casual 28x from launch. So, with metrics like these, the rate of adoption sounds like humans just discovered fire all over again. But here's what CZ won't tell you. Most of this is airdrop farming. Right before the last snapshot, volume spiked to $85 billion. Now, that's not some scandalous secret, it's just how every airdrop goes, but it does mean you should take the recent Aster metrics with a pinch of salt. And speaking of airdrops, Aster's is worth a look, and no, you didn't miss it. Isn't that refreshing? Aster is doing multiple rounds of its airdrop. They finished stage 1 and are wrapping stage 2 by the 5th of October, today in other words, but good news because there's also a stage 3. And to take part in stage 3, you can earn airdrop points by trading on Aster's spot market, which is great news if derivatives aren't your cup of tea. You earn points from trading volume with an emphasis on cross-chain trades. And there are also bonuses for holding Aster or using USDF collateral. And if you're wondering what the hell's USDF, don't worry, I'll get to that. Now, so far, Aster's airdrop has rewarded users quite handsomely, winning the exchange fans and, the team hopes, users who will stick around. If you want in on the next airdrop, you're in the right place too, because we've got bonus points on offer, so stick around to find out how to get yours. Now, time to hop onto the exchange. Getting started on Aster is nothing like signing up for Binance or any other centralized exchange. There's no email verification, no uploading your passport, no proof of address. On decentralized exchanges, your crypto wallet is your identity. But you knew that already. It's the whole point of DeFi. You don't need anyone's permission. First, though, you need a Web3 wallet. MetaMask is the easiest choice. It's the industry standard, works with just about everything in crypto, and has decent security if you're not an idiot about it. Download it, write down your seed phrase on actual paper, and you're ready to go. Aster also has an official partnership with SafePal, which means the DEX is integrated directly into the SafePal wallet app. If you're primarily trading on mobile, this can be smoother than fumbling with MetaMask's mobile browser. But honestly, MetaMask works fine. Once your wallet's set up, you'll need some gas money. If you're trading on BNB chain, that's BNB. On Arbitrum, it's ETH. Just a few dollars worth to pay for transactions. Without gas, your wallet's like a car with no fuel, going nowhere in a hurry. Okay, now it's time to connect to AsterDex.com. But before you start typing, hold on a second, because this is important. You can get a 20% rebate for life and Aster airdrop points just by signing up with the link in the description of this video or by scanning this QR code. There's no catch, just free perks you won't get otherwise. And by the way, you won't find that 20% rebate anywhere else. It's a Coin Bureau exclusive just for you, beautiful people. Once you've followed through, you'll need to connect your wallet. Click Connect Wallet and choose your wallet type. Your wallet will pop up asking permission to connect. Approve it. You might also need to sign a message. This just proves you own the wallet and costs nothing. All right, time for the next step. Scan your eyeballs and send them to CZ in a zipped folder along with your birth certificate. Just kidding, there is no next step. You're already in. No waiting around, no more hoops to jump through. Your wallet address is your account. Now, the freedom is nice, but remember, there's also no customer service to call if you mess something up. Welcome to DeFi. Now, on a DEX like Aster, security is a shared responsibility. The protocol needs to be secure, sure, but you're the one holding the keys. This is both empowering and terrifying. Aster is non-custodial. Your funds never leave your control. No frozen accounts, no FTX-style implosions. Not your keys, not your crypto actually means something here. But, like I said, this means there's no safety net. Send crypto to the wrong address? Gone forever. Lose your seed phrase? Kiss that wallet goodbye. Get caught off guard and sign a dodgy transaction? Your wallet gets drained while you watch. The responsibility is yours alone. That said though, Aster has done the basics right on the security front. The smart contracts have been audited by Cyberscope, Salus Security, PeckShield, and Halborn. Multiple audits from reputable firms is the bare minimum for any serious DeFi protocol. These audits check for vulnerabilities in the code, re-entrancy attacks, integer overflows, access control issues. And they're also running a bug bounty program on ImmuneFi, offering up to $200,000 for critical vulnerabilities. This creates a powerful incentive. Better to pay a white hat hacker $200K than lose $200 million to a black hat. It's basically outsourcing security to the world's best hackers. But still, audits aren't magic shields. They reduce risk, they don't eliminate it. And guess what? New platforms have bugs and complex systems can fail in unexpected ways. Indeed, days after Aster's perps market opened for trading, its listing of Plasma's new XPL token turned into a car crash when someone hard-coded the price index at $1, effectively turning it into a stablecoin. When they lifted a price cap before fixing this, XPL's price on Aster wicked to nearly $4, while its real market price on every other exchange was more like $1.30. Traders on Aster who were short XPL got liquidated en masse, all because of a configuration error. It's the kind of thing that makes you want to throw your laptop out of the window, and also the kind of reputational stress test that can make or break a new product in crypto. To Aster's credit, they handled it very well. The team acknowledged the issue immediately, communicated transparently, and fully reimbursed everyone who got liquidated, including fees. The whole thing was resolved in hours. Compare that to some centralized exchanges that take months to even acknowledge a problem, if ever. Now, unlike this kind of freak occurrence though, what Aster can't protect you from is your garden variety phishing scammer. These pests are the biggest security threat you will encounter on a regular basis in crypto. Like mosquitoes, they are everywhere, unavoidable, and consequently easily forgotten. But if they catch you with your guard down, even a single time, just for a few seconds, they can drain your entire wallet. These scammers create identical-looking sites, applications, and social media accounts to steal your wallet connection. So, always verify you're on asterdex.com. Bookmark it. Never click links from Discord or Twitter. If someone follows you, adds you, or DMs you claiming to be affiliated with Aster, they are a scammer. Aster is not going to contact you. You should also review your token approvals regularly. When you use a DEX, you're giving smart contracts permission to spend the crypto in your wallet. So, use one of the freely available Web3 apps to check what contracts have access to your funds and revoke permissions for protocols you're not actively using. It takes 2 minutes and could save your entire portfolio. And if you're trading with a significant amount of your assets, use a hardware wallet. Even if your computer or phone is completely compromised, hackers can't drain your hardware wallet without physical access to the device. It's the difference between keeping cash in your pocket and storing it in a safe. If you're actively trading, you'll need some funds in a hot wallet for convenience, but keep the bulk of your portfolio in cold storage. Only risk what you're actively using. The brutal truth about DEX security is that you're only ever one signature away from losing everything. To be safe, you have to stay locked in and, frankly, a little paranoid. Okay, so now that you've got your wits about you, time to figure out how to safely get your crypto onto Aster. Since Aster is a decentralized exchange, there's no depositing fiat with a credit card or bank transfer here. You need to already have crypto. If you're literally starting from zero, you'll need to buy crypto on a centralized exchange first, then withdraw it to your wallet. Annoying, but, well, that's the current state of DeFi. Now, the primary collateral on Aster is Tether's USDT. Like most centralized exchanges, everything revolves around USDT pairs. You deposit USDT, you trade with USDT, your profits and losses are in USDT. Simple. We'll get to the fancier collateral options later. As you'll recall, Aster works across its 4 supported networks: BNB Chain, Arbitrum, Ethereum, and Solana. The DEX runs smoothly across all 4, but for most users, BNB or Arbitrum will offer the smoothest experience, with sub-10-cent deposits, sub-second confirmations, and seamless integration with EVM wallets like MetaMask, which handle 3 of Aster's chains effortlessly. And if you've been living under a rock since 2023, good news. Ethereum mainnet is no longer ludicrously expensive. You can expect gas fees of $1 to $3 for deposits on Aster, making it a solid pick if you don't feel like storing assets on Arbitrum or BNB Chain. The kind of odd one out here is Solana. As you'll know, it's blazing fast and dirt cheap, but since it speaks a totally different language from Ethereum, Arbitrum, and BNB Chain, you might be surprised with quirks like network selection errors or UI sync delays that can happen when your Solana wallet meets anything cross or multi-chain. Nothing serious, but if you're new here, sticking to EVM wallets might make for a smoother ride on Aster. Although, do bear in mind that Solana is now integrated with MetaMask. Okay, to deposit USDT on the Aster DEX, make sure it's on the right network first. If you're withdrawing from a centralized exchange, the network you pick there must match the one you're using on Aster. For example, sending USDT via BEP20 to your MetaMask wallet lands it on BNB Chain. Via ERC20, it'll arrive on Ethereum. If you're new here, I know it's confusing, but you don't want to mess this up. For example, if you absent-mindedly send USDT via BEP20 to, say, your Solana wallet address or Aster's Ethereum deposit contract, that is going to be an expensive lesson in paying attention. Now, once USDT is in your wallet, go select your wallet address from the top right, hit Deposit, choose USDT, and select the matching network. Enter your amount. Your wallet will pop up to approve the deposit, allowing Aster's smart contract to move your USDT, and you'll pay that small gas fee. Confirm the transaction, and you're set. Solana is nearly instant, BNB Chain just a few seconds, Arbitrum usually under 15 seconds, and Ethereum closer to a minute. Your USDT lands in Aster smart contracts and shows in your trading balance. And however much crypto you ultimately want to deposit to Aster, you should start with just a small transaction. Just use a few dollars worth of crypto to make sure you're not punting anything into the abyss. Better to learn with pocket change than lose serious money to carelessness. Right, your USDT is safely deposited. Time to actually trade. Aster splits its trading experience into 2 completely different interfaces: 1001x for the thrill seekers and Perpetual for people who actually want to trade. If you're here for the spectacle of 4-digit leverage, you'll know where to find it. 1001x mode strips away everything that makes trading complicated. No order books, no charts cluttering your screen, no technical indicators to pretend you understand. Just pick your direction and pull the trigger. Trading is reduced to its most primitive form: up or down, moon or doom. And the interface is aggressively simple. Select your market, BTC USDT or ETH USDT are where the real madness lives, with actual 1001x leverage available. Enter the amount of USDT you want to risk and most likely lose. Slide the leverage slider to your heart's content, then hit the big green long button if you think number go up, or the red short if you think number go down. And that's it. Your position opens instantly at market price. Aster handles all the complexity in the background. It includes MEV resistance, which means those predatory bots that normally front-run your trades on other DEXs can't see you coming. Your trade executes at the price shown, not some worse price after bots have had their way with it. For a DEX, that's tech that really matters. But here is where 1001x mode reveals its true nature. It's a crypto-themed slot machine. And like all casino games, the house has stacked the deck. First, the fees. You're paying 0.08% to open and another 0.08% to close. That's more than double what you'd pay in perpetual mode. On a round trip, you're down 0.16% before the market even moves. At 1001x leverage, that 0.16% becomes 160% of your margin. Then there's the ROI cap, which Aster conveniently doesn't advertise in giant letters. Your maximum profit is capped between 300% and 500% depending on the asset. So even if you nail that perfect 1001x trade and Bitcoin doubles while you're leveraged to the eyeballs, there is no way in hell you're getting a 1000x return. You're getting 5x your risk at best. So the upside is capped, but the downside? That's all yours, pal. You can lose 100% just fine. And speaking of losing everything, let's talk about that 1001x leverage. At maximum leverage, a 0.1% move against you triggers liquidation. You could get liquidated between clicking long and reaching for your coffee. Now look, I get the appeal. The dream of turning $100 into $100,000 with one perfect trade is intoxicating. But 1001x mode is designed to separate you from your money as efficiently as possible while making you feel like you're one trade away from glory. The ROI caps mean you can't win big, the leverage means you will lose fast, and the fees ensure the house always gets paid. So, if you insist on using it, treat it like what it is: entertainment expense, not investing. Put in what you expect to lose, and if you somehow walk away with profit, consider it a miracle and never go back. Not financial advice. Now, let's talk about the actual trading platform. Perpetual mode is where Aster's real derivatives exchange lives. This is a proper trading terminal that wouldn't look out of place on Binance or Bybit. Fully featured, professional, and mercifully free of 1001x leverage. For beginners, this interface can be a bit overwhelming, but if you want to trade perps, you'd better learn it like the back of your hand. You've got your TradingView charts on the left, and to the right, the order book shows real-time buy and sell orders stacking up, giving you actual market depth. On the right, there's your order entry panel with all the controls you need. At the bottom, position management, where you track your open trades, unrealized P&L, that's profit and loss, and that all-important liquidation price. When placing orders, you've got options. Market orders hit instantly at the current best price, taking liquidity from the book with a 0.035% taker fee. Limit orders, on the other hand, let you set your price and wait for the market to come to you. So, say Bitcoin's at 118k, but you want to buy at 114k. Place a limit order, it sits in the book, and when the price hits 114k, you're in. And since you're adding liquidity, you only pay a 0.01% maker fee. That's a 70% discount just for being patient. Next up, stop loss orders. These are your lifeline. If a trade goes south, they cut it at a preset level, saving your account from a wipeout. Without one, you're speeding down the highway, possibly in the wrong direction, with no brakes. Not going to make it. And here's a pro tip. If any single trade's got you sweating, it means you risked too much. A trader's job is to survive hundreds of trades, not risk it all on one make-or-break moonshot. The latter is the Hollywood version of trading, and it will wipe you out very quickly. Now, leverage and margin. These get a bad rap, mostly because they're tied to liquidation risk, but this is a red herring. In trading, risk comes from your position size, how much you're trading relative to your account. Stick to risking 1% per trade and never put yourself in a position where account liquidation is even on the table. Say you've got $10,000 and risk $100 max. You open a $1,000 Bitcoin position. If the trade goes south, your stop loss triggers, you lose $100 and you're ready for the next trade. With leverage, you could put up $100 as margin for that same $1,000 position using 10x. Same risk, less capital tied up. If the exchange has issues, only $100 is at stake, not $1,000. Now, about that collateral. This is your margin, and like most exchanges, Aster offers two modes here. Isolated margin is way safer. You assign, say, $100 to that $1,000 position. Your liquidation price is likely to be much closer, but if it hits, that's only your $100 gone. The rest of your account is safe. Cross margin, though, uses your whole account as collateral, which means your liquidation price is further away, but if it hits, you are wrecked. Higher leverage does bring your liquidation price closer, but like I said, manageable position size and stop losses should always place you far away from that cliff. Okay, next up, an Aster exclusive, hidden orders. As the name suggests, these are orders that don't appear in the public order book. If you're trading a modest amount of crypto, you might not think twice about your moves being publicly viewable. But for whales, this is a serious consideration. On transparent DEXs, large visible orders are like blood in the water. They attract front-running bots, cause other traders to adjust their strategies, and generally move the market away from you before your order fills. Hidden orders let you trade size without painting a target on your back. CZ himself specifically called for this feature on DEXs, recognizing that whales need privacy to operate effectively. The execution is also MEV resistant, though in a different way to 1001x mode. Your trades are structured to minimize extractable value for bots. Combined with hidden orders, you can actually trade significant size on Aster without being foiled by your visibility. Now, about those fees I mentioned. We've already covered the basics. 1001x mode charges 0.08% per side. Perpetual mode runs 0.01% maker and 0.035% taker. You should probably know that Aster is undercutting basically everyone here, lower than Hyperliquid, DYDX, and even Binance Futures. If you're serious about trading, this is a big deal. You can also pay trading fees with Aster tokens for another 5% discount. That's nice, but even nicer is the exclusive 20% rebate that you can only get by signing up with our link in the description or this QR code. Here it is again if you missed it. And one more thing to keep in mind is funding rates. Payments between longs and shorts every 8 hours to keep perp prices anchored to spot. This is not Aster charging you, it's just how perpetual derivatives work. The direction and rate of payment varies all the time, but if you're holding a trade open overnight, these funding rates can cost you more than trading fees, so do keep an eye on them. And when it's time to cash out, getting your money off Aster is refreshingly straightforward. None of the identity verification delays you'd face on centralized exchanges, and comfortably high withdrawal limits too. The process mirrors depositing. Head to your portfolio, hit withdraw, select USDT and your network. Once again, triple check that destination address. One wrong character and your USDT goes permanently bye-bye. Copy-paste it, verify the first and last few characters match, then verify again. Then your wallet pops up for gas fees, you confirm, and you are done. Now for your post-withdrawal security. If you're actively trading, keeping funds in a hot wallet is fine. But for anything you're not touching daily, get yourself a hardware wallet. Ledger, Trezor, Engrave, Tangent. Just pick one and use it. The inconvenience of physically confirming transactions beats losing everything because you kept it in hot storage. Meanwhile, for the tax-conscious, every trade on Aster is a taxable event in most jurisdictions. If you're day trading with size, you're creating a compliance nightmare. So consider running your DEX activity through a dedicated wallet to keep tax records straightforward and yours and/or your accountant's sanity intact. Now, beyond trading, Aster has built an ecosystem designed to squeeze more value from your capital. Some of it's genuinely innovative. Some of it's just more ways to take on risk. The standout feature is USDF, Aster's yield-bearing stablecoin. You mint USDF by depositing USDT one-to-one. Behind the scenes, that USDT gets deployed into delta-neutral strategies on Binance, basically arbitrage trades that theoretically can't lose money. The yield from these strategies flows back to USDF holders. The APY fluctuates but has hit double digits during volatile markets. And here's the clever bit. You can use USDF as collateral for trading. Your margin is earning yield while backing your positions. It's capital efficiency that most exchanges can't match. Now, of course, delta-neutral strategies aren't risk-free. They can and do blow up, especially during black swan events. If disaster strikes, USDF might not be worth $1 anymore. There's also a similar concept with ASBNB, liquid staking that earns 3 to 5% APY while serving as collateral. Your margin works twice, in other words. Just remember though, if BNB crashes while you're leveraged elsewhere, then you're getting liquidated from multiple angles. And another exclusive you won't find on many other DEXs is stock perps. Apple, Nvidia, Tesla with up to 50x leverage, trading 24/7 settled in USDT. You'll find pretty thin liquidity and wide spreads during US market closes, but it does work. So there you have it, everything you need to know about trading on Aster DEX. We've walked you through connecting your wallet, depositing funds, navigating the 1001x minefield and the professional perps terminal, understanding the fee structure, and exploring the yield features that let your collateral earn while you trade. Aster is a solid platform if you stick to perpetual mode and treat it like the professional trading venue it can be. Super low fees, good execution, useful privacy features, these are legitimate advantages. The yield features are clever, though not without risk. Just remember that self-custody means you're responsible for everything, from wallet security to tax reporting. And if you want to try Aster yourself, here's that sign-up link once again for a 20% rebate plus Aster Airdrop points. And if you're still thirsty for yet more DEX war drama, then you can check out our full head-to-head comparison of Aster versus Hyperliquid right over here. But that's all from me for now, folks. As always, thank you for watching, and I'll see you next time. This is Guy, over and out.